Uh, yes. So basically, it's like any commodity in two respects. If you look at commodities over the very long term, there's no real price appreciation. And it's an important insight. So people say, well, you can get a risk premium for investing in commodities. Well, it's really hard to see historically, very hard. And then people say, well, maybe it's small. Maybe it's 1%. Maybe it's a 0.5%. I don't think so. Because it doesn't make a lot of economic sense. And the way I've got a research paper I'm working on gold. And gold is interesting is you've got a very long time series of gold prices. And the price might be not like in dollars, but it might be in kind of wages or the ratio of gold to grain price. That's available for a very long time. And you think about gold, and even if it had a 0.5% annual return, it doesn't make sense. Because a little bit of gold with a 0.5% return in the year zero is worth so much today that it just can't be. It just can't be. It doesn't make any sense. And I've done this interesting work where we look at the wages of soldiers in the Roman army in terms of gold. It was very clear what they were getting. And then compare that to the wages of people in the military today in the U.S. And again, when you look at the gold ratios, it's just impossible to think of a return that is like above zero in real terms, or a fraction above zero. So, like gold, oil is a commodity. Gold is different because it's kind of like a currency. Oil is just more of just a regular commodity. And in oil, there are substitutes. The price gets high enough, then the substitutes kick in. So there could be technological change. There could be discovery, like national, gas and natural gas and other things. So I think that basically what happens over the long term, it could be the price of gold goes to 200, but basically as soon as that happens, alternatives kick in. And we already seen that in Canada, where the price of gold got beyond a certain point where all of a sudden these massive reserves in Alberta became proven reserves. They were always there. People knew it was there, but it had to be proven. It has to be above, the oil price got to be above a certain level so it's feasible to extract. Does that make sense? So no, all of a sudden they get the second largest reserves to Saudi Arabia. So that's going to be available. If the U.S. doesn't want it, that's fine. Canada ships it to China. It goes onto the open market, and that's going to moderate the price. Natural gas, same sort of thing, moderate the price. So even though you've seen the oil price go up dramatically over the last 20 years, it is naive to extrapolate that forward into $500 a barrel oil. That's just not going to happen. Alternatives kick in.